Members, welcome to your Monday evening update. We have Darth Vader wearing the mask. This is the new image for Zero Hedge. Zero Hedge is an extremely popular news site for big money hedge fund managers and just about anyone in finance. And Friday, when they posted a article essentially claiming that perhaps China made this coronavirus and mixed it with the AIDS virus, their account was suspended. And they had 600,000 followers. Everybody and their mom, who I follow, was very upset, retweeting. Anyway, Zero Hedge has a new account, and their title is Account Suspended. This account has been suspended, and they put up that new image. So what was that article all about? Well, there's a new article on Zero Hedge today, India to probe Wuhan Institution of Virology. It appears that around the time we suggested, someone reach out to the Wuhan Institute of Virology to get some answers about the origin of the deadly coronavirus epidemic, which Twitter decided was sufficient to get us barred from the platform. India was doing just that. The Indian government has ordered an inquiry into a study conducted in the northeastern state of Nagaland, close to China, by researchers from the US, China, and India on bats and humans carrying antibodies to deadly viruses like Ebola. The study came under the scanner as 2 of 12 researchers belong to the Wuhan Institution of Virology Department of Emerging Infectious Diseases, and it was funded by United States Department of Defense. They would have had to have required special permission as foreign entities. And they are now being investigated for how the scientists were allowed to access live samples of bats and bat hunters, humans, without due permissions. The results were published in October last year of the PLOS Neglected Tropical Diseases Journal. Bill Gates, the richest man in the world, had issued a grave warning about the potential coronavirus-like catastrophe that could kill 30 million people at the Munich Security Conference held in Germany in 2017. Steeped in secrecy, researchers from the US, China, and India conducted the study on bats and humans carrying antibodies to deadly viruses like Ebola. Given the widespread challenges from the newly discovered viruses, officials say they want to take no chance on their spread and will take action to ensure all medical studies in the country adhere to strict norms. Indian military believes that the U.S. Center for Disease Control in Atlanta was involved in the 1994 plague in the Indian city of Surat, which killed 52 people, and close to a quarter of the city's citizens fled the area for fear of being quarantined. Even the origin of 1994 plague is mired in controversy to this day. The New Delhi bureau chief of The Week magazine, in his piece questioning whether the coronavirus was created in a lab, wrote, during the 1994 plague outbreak in Surat and Bede, it was found that the germs had an extra protein ring, which could have only been inserted artificially. Indian scientists had raised concerns about a U.S. biowar experimenting having gone awry. This week had carried reports giving details of germ war research being carried on in the labs under the Center for Disease Control in Atlanta about newly developed germ detectors being tested. The U.S. Embassy had denied the allegations. There were also reports that the Surat germ could be developed in a lab. Mr. Prasannan is one of the many experts from different fields who have raised doubts over the narrative being paddled by certain sections of the media. Among them is American Senator Tom Cotton, who questioned mainstream media's narrative of the origin of the 2019 Wuhan coronavirus, instead hinting that a biosafety laboratory in Wuhan working with the deadliest pathogens in the world could be the true source. Even Dr. Francis Boyle, who drafted the Biological Weapons Act, in an explosive interview, said that the 2019 Wuhan coronavirus is an offensive biological warfare weapon and that the WHO already knows about it. Okay, now what I'm looking at is the article from Great Game India that goes into detail on what you could call a conspiracy, although it doesn't look very conspiratorial due to how many facts are in it. Coronavirus bioweapon, how China stole the coronavirus from Canada and weaponized it. Last year, a mysterious shipment was caught smuggling the coronavirus from Canada. It was traced to Chinese agents working at a Canadian lab. Subsequent investigations by Great Game India linked the agents to Chinese biological warfare program from where the virus is suspected to have leaked, causing the Wuhan coronavirus outbreak. And so, to summarize what the article is going to go through, and we'll read through a lot of it, is that a SARS coronavirus picked up in 2012 ended up in a Canadian research facility, which had some Chinese scientists working there, which they also were getting supposed Chinese free students to come in. And then these viruses made their way to China, specifically to that Wuhan city where they have their only level 4 biological laboratory. So this goes back to 2012, where a scientist found this sick fellow, found that there was a new type of coronavirus, and began studying it. This then made its way to Winnipeg in Canada, where it was further studied. They were testing it on other animals, growing the virus and keeping it there so they can try to study it and analyze how it works. Here's a look at the facility. And NML has a long history of offering comprehensive testing services for coronaviruses. It isolated and provided the first genome sequence of the SARS coronavirus and identified another coronavirus in 2004. In March of 2019, in a mysterious event, a shipment of exceptionally virulent viruses from Canada's NML ended up in China. The event caused a major scandal, with biowarfare experts questioning why Canada was sending lethal viruses to China. Scientists from NML said the highly lethal viruses were a potential bioweapon. Following investigation, the incident was traced to Chinese agents working at NML. 4 months later, in July of 2019, a group of Chinese virologists were forcibly dispatched from the Canadian National Microbiology Laboratory, NML. NML is Canada's only level 4 facility and one of only a few in North America equipped to handle the world's deadliest diseases, including Ebola, SARS, coronavirus, etc.
Good morning.
Dr. Zhang Chu has been recognized by the Governor General's Innovation Awards.
This work can't be done without teamwork.
She and the team at the National Microbiology Lab have been praised for developing an Ebola vaccine. But just over a week ago, Chu, her husband, and her students from China were evicted from Canada's only Level 4 lab, their security access revoked. Staff at the lab was told last Monday the couple is on leave and not to communicate with them.
We're getting this from sources who work at the lab, but who don't want to be identified for fears they'll be punished. They say this is coming just months after IT specialists entered Chu's office after hours and replaced her computer, and her superiors stopped authorizing work trips to China.
Manitoba RCMP confirmed it was called in by the Public Health Agency of Canada on May 24th. A spokesperson says the agency is investigating a policy breach, calling it an administrative matter, and it's taking steps to resolve it expeditiously. We can assure Canadians that there is no risk to the public and that the work of the NML continues in support of the health and safety of all Canadians.
All this, of course, is unproven, but even microbiology, sometimes especially microbiology, can have issues that involve national security.
It's something CSIS has already warned about.
Canada is facing threats from foreign espionage, and not just in the traditional sense of trying to understand what our national security interests are and agencies are involved with, but threats to our economic security.
Canada's relationship with China has been strained ever since the detention of a Huawei executive on a U.S. arrest warrant. Shortly after, China detained 2 Canadians, accusing them of stealing state secrets. This likely won't go over well and could even deepen the diplomatic divide. Karen Pauls, CBC News, Winnipeg.
Dr. Jianguo Qi is married to another Chinese scientist, Dr. Keding Chang, also affiliated with NML, specifically the Science and Technology Core, primarily a bacteriologist who shifted to virology. The couple is responsible for infiltrating Canada's NML with many Chinese agents as students. And they have been interacting with 4 key biological warfare institutions: the Institution of Military Veterinary Academy of Military Medical Sciences in Changchun, the Center for Disease Control and Prevention in the Chengdu Military Region, the Wuhan Institute of Virology, the Chinese Academy of Sciences in Hubei, and the Institute of Microbiology in Beijing. All of the 4 mentioned Chinese biological warfare facilities collaborated with Dr. Jianguo Qi within the context of Ebola virus. The Institute of Military Veterinary joined a study on the Rift Valley fever virus. Now, while Twitter is certainly influenced by China and probably has a lot of its sharehold stocks sold to Chinese, and we have seen them do a lot of censoring to protect China in the past 2 years during the trade war. But they're going to be more pressed by U.S. government officials. So for them to actually terminate Zero Hedge for simply linking to this article about potentially this being a man-made virus does raise eyebrows. Now here's potentially some connection to the U.S. government. Dr. Jianguo Qi also collaborated in 2018 with 3 scientists from the U.S. Army Medical Research Institute of Infectious Diseases, Maryland, studying post-exposure immunotherapy for 2 Ebola viruses and Marburg virus in monkeys, a study supported by the U.S. Defense Threat Reduction Agency. Dr. Jianguo Qi made at least 5 trips over the school year 2018 through 17 to the above-mentioned Wuhan National Biosafety Laboratory of the Chinese Academy of Sciences, which was certified for BSL-4 in January of 2017. Coincidentally, the Wuhan National Biosafety Laboratory is only 20 miles away from the Huanan seafood market, which is the epicenter of the coronavirus outbreak dubbed the Wuhan coronavirus. You can see the proximity of the lab to the seafood market. And again, we've seen that a lot of the first people sick never even went through that seafood market, so it does seem quite unlikely to be caused from seafood. James Giordano, a neurology professor at Georgetown University and senior fellow in biowarfare at the U.S. Special Operations Command, said China's growing investment in bioscience, looser ethics, and gene editing, and other cutting-edge technology and integration between government and academia raise the specter of such pathogens being weaponized. This could mean an offensive agent or a modified germ let loose by proxies for which only China has the treatment or vaccine. This is not warfare per se, he said, but what it's doing is leveraging the capability to act as a global savior, which then creates various levels of macro and microeconomic and biopower dependencies. China's biological warfare program is believed to include full range of traditional chemical and biological agents with a wide variety of delivery systems, including artillery rockets, aerial bombs, sprayers, and short-range ballistic missiles. Let's not forget that big parade President Xi put up where they're showing off their military might. All right, guys, well, I'm going to jump out of this article. It keeps going as deep as you want to go. I'm not saying it's true or not, but it does seem like there's an awful lot of evidence to suggest it's certainly a possibility. CDC confirms 11th U.S. case in California, 195 quarantined on military base, virus updates. Stocks are still in the green, but the administration is taking zero chances. To wit, the USTR's office reportedly told Fox that China hasn't requested any changes to the Phase 1 trade deal struck last year, just before the virus emerged as a global threat to the public. Here's an article from Nomura. Now, this is a big Japanese bank. Charlie McElligott is pretty famous for coming up with different strategies from time to time, especially related to predicting short-term volatility that's caused by an elevated VIX. So he has these models that calculate numbers. And apparently the number today is 325.40. Essentially, it's not just certain price levels that create selling in a lot of these auto-traded systems. It's actually the rate of change or the acceleration, and specifically up or down. So either go short. If it's crashing, the momentum tends to make all these systems sell as long as the acceleration is continuing, and to buy on the way up and again to sell on the way down. But when that volatility reduces or the rate of change slows down, that's what's causing these systems to flip back and forth. And so essentially they're looking at 325.40 on the close today. Anything below that could cause more selling going into tomorrow and through the week based on his models. And they're quite interesting. Now, of course, I'm more of a fundamental trader, but I like that this, even though it is a technical system, is still understanding some of the fundamental causes that are creating this. And so as the VIX accelerates higher, that's really his signal, and that's what's causing these numbers to move around as the market moves around. According to Charlie, the CTA model shows that despite the overall signal for the SPX position remaining 100% long as of this morning, the short-term 2-week window has flipped short due to the recent impulse move lower, the jump higher in the trailing realized volatility, which means the gross exposure in the SPX futures position has been deleveraged from the 2-year high of 60% made last week, now reduced to this morning of 49.8. And while the 2-week signal in the CTA model is already a sell, if today the S&P closes flat or worse red, you would expect to see the 1-month signal turn sell tomorrow as well. Still, the only signals that matter for now are the 3-month, 6-month, and 12-month models. Thus, position maintains overall 100% long status. But that too will change if SPX spot closes below gamma, as dealers are now incentivized to chase the market lower, resulting in lower prices, higher VIX, and even greater delta between spot and gamma, even more selling in the feedback loop. Bottom line, keep an eye on where the S&P 500 closes today. 325.40 is all that matters. All right, guys, I'm going to start looking at some other information now. This is the yield curve, which is inverted. And again, this definitely causes eyebrows to rise. How will the Fed deal with it? Well, conveniently, the T-bills are sitting right there at the lower bound of the federal funds rate, which is 1.5 to 1 3/4. But your notes on the 2, 3, 5, and 7-year have dropped. And so this would insinuate the bond market thinks that rates will be cut at least 3 more times in the near future by 25 basis points and presumably even further. So the bond market is not agreeing with the U.S. stock market if you do think that those two are one or the other is correct. Now, big picture, perhaps we just have money flooding into everything U.S. as Asia is in turmoil. So they're looking for dollars, treasuries, corporate bonds, and U.S. stocks, and trying to stay away from calamity and losses in Asian products while this coronavirus wreaks havoc on China's economy and surrounding territories. Here's the coronavirus map that, again, I was expecting that China would not allow more than a couple thousand cases to be diagnosed per day, which perhaps the less detail-orientated American might look at and think it seems realistic. And from a scientist point of view, the exponential growth has officially just been smashed to the ground, because today we should be sitting on something like 70,000 cases, 50 to 70,000 cases by tomorrow, and by end of the week up seeing somewhere around 10 to 100,000 cases a day, and be into the millions by the end of February. And so while that might actually be happening in China, they're certainly not reporting it. And it looks like they've actually designed it so that's not possible. They're making people stay home. They're only giving the hospitals a certain amount of kits. So I think what is going to be more interesting is to start ignoring what's coming out of China, assume it's very bad, and instead start watching the account of Japan, Thailand, Singapore, and Hong Kong. If we see that these are doubling at a rate of one double per week, then we can assume this is definitely out of control and should most likely be what we're looking out for. Now, if you remember last week, I was saying in the United States, I'd be very alarmed if we went from 5 to 10. And sure enough, a week later, we've gone from 5 to 11. So another place to be concerned about would be in India, which we can tell the Indians are very skeptical of the Chinese and have already been publishing a lot about their neighbor and what they're doing with testing bioweapons. Oil prices crashing have been the hot topic, especially as of today. And again, this does insinuate low growth, makes you want to be long the TLT, which we are in our portfolio, and makes you precautious on the health of global economy and growth for stocks. So we have a very tight option caller still betting up on U.S. equities, at least short on emerging markets, long on gold, long on the U.S. bond market in terms of treasuries. And if China's growth is slowed for a considerable amount of time, the same time that Aramco is pumping out more oil, this could be a disaster for oil prices. So something to definitely keep a close eye on here. Okay, now we're looking at spot gold, which is up above $1,580. It costs the miners around $1,000 or less to mine an ounce of gold, so they're making a healthy profit, which is not always the case in the gold mining industry. And most likely, if China is reducing production and potential GDP for a prolonged period of time, their impulse and the rest of the world's impulse will be to cut interest rates, make the cost of money cheaper, try to get more spending going on, keep GDP healthy so you can protect your businesses and corporations, and thus tax revenues and labor market, and then worry about funding the government debts later on, which is typically when QE comes in to pick up the tab on government debt after we've given life support to stock market. So most likely that's what's coming. The yield curve's telling us this, spot gold is telling us this, and also just the actions of the Chinese are telling us that this is most likely what's coming. Rate cuts, QE, both of these are bullish for gold in the long run. That's why we want to own the gold miners during prolonged periods of elevated prices on spot gold. And so quite frankly, it may not ever go back below 1,500 if they keep up the money printing for the next 5 to 10 years. Now, what ends all this, of course, is inflation, at least once they feel like the inflation is too much and they start hiking interest rates and even potentially trying to pull some of the liquidity out of the market. And that's when we'd want to be short gold. Now, in this chart, we're comparing the U.S. 30-year Treasury yield, percent change relative to the German 30-year bond. And remember, Germany is highly dependent to China. China's highly critical for the global growth story. And so focusing on China is critical for getting the big picture correct. And if this yield is falling, it typically acts as a leading indicator for U.S. Treasuries, as it's all relative in terms of what people are willing to get paid to lend money to the government. And so ever since September, when the rumors came and came true eventually that we would stop having a trade war with China, we can see that yields were rising, indicating the government could not sell its debt efficiently. Stocks rallied, and central banks came in with QE, picking up the government's debt. And that big picture swing from September, when the monetary easing or QE began, has ended in 2020. As yields fall, that does represent the debts being sold easily, and thus we've seen very little, actually no expansion of the balance sheet since 2020. So again, it does look like China is in trouble. Emerging markets and the whole area are not having healthy growth. Thus, money is rushing into to debt markets, expecting central banks to cut rates to stimulate the economy. That will drive these yields even lower and allow the bond buyers to flip for a profit. So I do believe this will continue for much of February and potentially even longer until we just see how bad this slowdown in China is actually going to be. Here's a great cartoon. I believe that's supposed to be either the WHO or President Xi or somebody. Don't worry about the coronavirus. We have everything under control. Hangzhou just announced the closing of all non-essential public spaces. All residential and office buildings will be entrance by registration only. And Hangzhou currently has 118 coronavirus cases and a 10 million population. So we're currently 30 minutes from the close, where I'll finish the video by looking at the closing prices on our core positions. If you're just using a buy and hold portfolio with no options, our current setup is 1 share of SPY, 2 shares GDX, 2 shares of TLT, and 2 shares of Yang, which is the inverse ETF of EEM. And this portfolio, again, is designed for more risk, more return, more volatility. Picked up a 2.3% return in January, down 0.2% in February, and is a very simple strategy that rarely changes positioning. However, in our more advanced program, we trade the SPY ETF Monday, Wednesday, Friday, the emerging markets on Tuesday, and the TLT and GDX on Thursday, and we add a huge layer of protection with the options market. So this video you can get on YouTube for free, but if you really want to take your returns and your safety to the next level, I'd highly recommend grabbing a free trial to try the same strategy but with options added. And included is a daily live webinar via Zoom where you can chat with me and my entire team who's following these trade alerts. Now, during that free 7-day trial period, we do give you access to the SPY trades for free Monday, Wednesday, Friday, taking advantage of 3 option expirations per week. And we're currently outperforming the SPY. Again, this is going to aim for low volatility with safe returns and not just total returns. So while the buy and hold no option trading portfolio may have a greater return so far to date, that's, keep in mind, during a big bull market where there's interest rate cuts, which made it very easy to own just about anything. In the option trading program, we are having to pay off the cost of option protection, predict markets accurately to print out these returns. And notably, you can see we've only had a single losing month in 14 months. That was in July, and I was preparing us for a trade war escalation. I was 1 month early, so we did catch that win in August. But again, the option trading program is very popular with investors who have at least a couple $100,000 to invest. They're in retirement. They really don't want to risk losing very much money at all. And the only way to have absolute protection is to own put options underneath each asset. So you'll give up some of the potential profit for extreme safety. And I'm talking about atomic bomb proof, coronavirus proof, Bernie Sanders proof, retirement income, where there's absolutely nothing that can create a large loss because we, again, have put options under everything at all times. Now, right now is a very rare time where we're playing TLT and GDX a little bit differently, and that's because we're on the brink of a pandemic. Now, in the option program, I'm not going to give away any of the trades. If you do follow it, you know how we're playing the market. We're essentially long the SPY, long the TLT, but with options protecting and creating income from selling calls and buying puts. And then we're playing the bond and gold market slightly differently. Okay, so we're coming into the close. We've got 25 minutes. Nomura from Japan, Charlie McElligott, are predicting that the market will be incentivized to close above 325.50, 50 cents higher than we are currently. So we'll see if that comes in or not. Meanwhile, we can see this trading band we've been bouncing around in. We just hit the upper level, and so the next real good resistance line, somewhere right here between 320 and 322, although from a technical standpoint, while this little sell-off makes a lot of sense, from a fundamental, the picture does get a lot scarier, assuming that China does slow down, that this virus does continue to grow. Some of the support lines are much lower than we currently are anticipating with this range right here, which would potentially bottom out around 290, 280. Depending on how far into the future we go, you can see these levels continue higher. But if I go to a monthly chart, you can see just how exuberant this market has been. And now all of a sudden, some of these resistance levels and lines could bring us all the way back towards 230 to 240, which obviously would be a much more significant sell-off and could potentially be caused by the cases in the U.S. simply doubling every week. So we went from 5 to 10 last week, go to 10 to 20, and another week probably don't scare people. We go to 20 to 50, 50 to 100. Well, by the end of February, you could be really, really freaking out people, especially if we see Japan's numbers double from 20 to 40 in the next week and continue to get massive amounts of deaths coming out of China. This could all pile up into the news cycle very quickly. Okay, guys, here we are at the market close, and we're at 324.15 in our option program. We entered at 324, so we have protection from 324 below. Can't lose a penny, but we do want it to travel to 327, hit our maximum profit. And again, if you're not taking our option trades, I highly recommend you take the free trial from our homepage. You'll get a daily live webinar with our entire crew and get to see how we play this even safer by throwing options on top of the equities. Let's take a look at some of the other positions in our portfolio. TLT, we're long, so good day on the TLT for our portfolio. Look at the 1 hour chart, and after bidding lower in the morning, it drove higher all day, delivering substantial profits. That is 40% of our portfolio. Emerging markets rebounded. We were short emerging markets from 43, so we're currently up slightly on that. However, I would have expected a bigger drop with limit down in Asia. And finally, GDX is having a little struggle against spot gold, but the big picture for GDX remains intact. And this is actually a position I believe we will hold for a very long period of time. Depending on how long the rate cuts take and how long they do QE, will determine how long we want to hold this position. But most likely this will be at least a year, potentially 2, 3, 4, 5 years of dramatically lowering interest rates, doing quantitative easing, and trying to stimulate economies at the face of huge levels of debt, which are piling up interest and putting a drag on GDP globally. Okay, guys, that's your wrap up for today. Thank you so much for your time watching this video. Do us a favor, like it, share it, put a comment on there. All of that really helps us get ranked higher in YouTube. And of course, take your free trial to see how we take this to the next level. Thanks again.